recipes for technical trading success in Cook's Kitchen.
All right, let's talk Tesla, bull or bear, before earnings. Hopefully, I'm getting this out to you by Wednesday morning. Tesla reports Wednesday, July 19th, after the close, and maybe you'll be bullish too. I have a skeptic who's turned bullish. I made up an acronym for it. Tesla skeptic learns algebra, and we'll see why. The math matters in a moment. But basically, yeah, a skeptic turned bullish. And so even if you don't get to watch this before earnings and the stock reaction, this will still help. It'll help you see what the important data points are and why my mind changed. And maybe we get the pullback that Tesla disappoints on margins as they're expected to, or worse, and you get a chance to buy it. Who knows, below 250. All right, so we're going to run through a lot of stuff pretty quick. The big news on Monday was Ford comes out and slashes prices on the F-150 Lightning. Now, for 2 years, I have been a F-150 Lightning bull. We've owned Ford and had some great trades, but and we just bought it again at $12 a couple of months ago. But when I saw this news yesterday, we got out. So we gave up, gains of over 25. Ended up settling for, 16% or something, because even though Ford tried to sort of massage the reason that, hey, lithium prices have come down, we're producing more, so we want to pass it on. The story doesn't quite fit. There's a glut of the trucks, and guess what's coming? The cyber thingy. So here was the piece I did 2 years ago in this is July 22nd of 2021. I said the F-150 Lightning will crush the Tesla Cybertruck. Now, and part of my reason was the reason I've been a Tesla skeptic. You could say it's the 3 Ds. It's about deliveries, debt, and distractions. And deliveries, I've always doubted that Elon would be able to make the deliveries that he said he would. The Cybertruck has been talked about for a while. It's still haven't. They just produced one this weekend, but and then debt, versus cash flow and profit. But he turned it around, and we'll look at some of that data. And then distraction. I mean, the guy is busy. Thank God he's like Jensen Huang from NVIDIA, and he surrounds himself with the top engineering talent in the world. But I thought Twitter was a huge distraction. That, when you got a space company working with NASA and the premier EV company. But anyway, you can still find this on YouTube, and I'll have an article version linked to it somewhere. In fact, the article version on Zacks.com has more details about my thesis of why I thought that contractors and fleets would adopt the F-150 Lightning because of all its practical utility and sexy features, digital applications, et cetera, and that would bring other people in. But they became too expensive, and so that's catching up to Ford. All right, you can just find this if you go to Zacks.com and just go to the quote search window right here. If you just type "crush," you'll find this article. All right, so back to the stuff here. All right, this was Gene Munster, longtime tech analyst. He's always been a big Apple and Tesla fan. He said in a couple of tweets on Monday that it said, Ford mentioned those reasons for the price cut, but he said it's hard for him to believe that if Ford is going to be losing 25,000 on each truck. So, what are they really passing on? He believes that, that Ford feels caught here. Now, I'm still a big Jim Farley believer. I think he's got a long game vision for what they can do with EVs. And I still think the F-150 Lightning was a great concept, but they just couldn't sell it at the prices they needed to. And so here we are. You can stop this video and read his tweets. We'll come back to him shortly. Here's revenues. Just, big picture. I was ignoring the revenue ramp. I thought that Tesla wouldn't make any money on this revenue ramp. That they were selling. They were selling it at depressed margins. How wrong I was, right? Let's take a look at what's happened recently here. So for the stock, here we are pushing 290. So I sold Ford and bought a little Tesla yesterday on Monday. This was a significant day. So Friday, June 30th, we come into the new month, Monday, July 3rd. Why? Because the second quarter numbers came out for global auto sales. Some of them were estimates, but we're going to take a look at a graph in a minute that'll show that on the margin the estimates don't matter. It's Tesla blew everybody away, and so that's why the stock popped. And so we'll see what's holding some analysts back, because you wouldn't believe how bearish the street is. By the way, this revenues, you're looking at crossing 85 billion on a 12-month trailing basis. The estimates right now are that Tesla's going to do 100 billion this year, which is about 23% growth, and 125 billion for next year, which is 25% growth, obviously. And it's trading at under 9 times sales. So this is another thing that opened my eyes. All right. Well, what was Tesla doing to sell more cars? And why is everybody worried about margins? Obviously, Tesla was cutting prices, and we saw that in Q1, which was a disappointment. Top and bottom line was a disappointment, but Tesla just kept going on. They continued to cut costs, so you're seeing in April and May and into June, prices falling. So that's why everybody's concerned about margins. Okay, here's a quick look at EPS. What you're seeing, the dark green line is trailing 12-month EPS. So, up in here on the right-hand scale, this is showing, let's call that 365 or something. This is fully diluted. Okay, so non-GAAP, let's say they did $4 last year, and they're gonna lose money relative on an annual basis. Let's say down 13%. But so look at the dotted blue line. That's the one we're concerned about, is the quarterly fluctuations here, where Tesla's in trouble on the EPS front and margins slip below 20%. So that's what analysts are focused on, and that's why a lot of them are neutral to bearish. Here's a data point that I missed. Coming into this year, Tesla was sneaking up on Mercedes, BMW, and Audi. And the headline here is that they just pinched Audi for global sales. And this is obviously from Mercedes, Audi, and BMW. These are their premium deliveries by quarter, in the hundreds of thousands. And here's where Tesla is catching up. So here was the graph that blew my mind when I saw it. This is for all of first half. So we got the Q2 numbers, came out July 3rd. This was from the source is Motor Intelligence here, but this is the whole first half, Q1 and Q2. 200,000 Tesla Model Y. Wow, I did not know that they were being that aggressive with pricing and getting. Obviously they were meeting production now, but were they selling the vehicles? Clearly they were. Tesla Model 3 comes in second and still blowing everyone away. Rivian is 16,000, and where there's asterisks, those are estimated right now. And we have to go all the way down to the bottom to see the F series. The F150. So that's a little disappointing on the sales there. And we see it. You go on YouTube and there's always a guy published a new video vlog about how he returned his is F-150 Lightning for this, that, or the other reason. And the inventories are stacking up, right? So, even Tesla Model X and S, are right in here. Here's the Mach-E. So this was, the closest competitor, right, to the Model Y, and just, can't compete there. All right. Here were some interesting articles just in the past week. Used EV prices are collapsing, and Tesla is why. That's it. This is obviously what Ford was responding to, right? I mean, how are they going to compete? And they don't want to. What I learned, and we're going to see the guy I learned it from, is that days on the lot, the inventory was like getting up to 90 days for an F-150 Lightning, and maybe the Mach-E was even higher. So obviously Tesla's price cut strategy is going to hit revenue and profit. And all right, so here was a guy I follow on Twitter, and Farzad. He really dives into this stuff, and he did a great presentation. This is a video. He put this on Twitter on July 11th, and he must have just done it on YouTube. But it's really good. It's only not even 12 minutes long, and that's where I got this chart from that he shared. But he really goes over the dynamics of what's happening with Tesla sales and why the other guys can't compete right now in EVs. So let me show you his YouTube page, because I want you to watch it when you get a chance. So here he is. So I want to point out this video from 6 months ago. Tesla has won. It's over. I'm not kidding. Now, I didn't see that until I actually haven't even watched it because I've watched some of his other stuff on Twitter. But suppose I had seen that 6 months ago, I wouldn't have. I don't know if I would have believed him. Maybe he had some convincing evidence and logic and data in there, but turns out he was right. And we're going to look at the numbers to see why he was right. So I would say definitely want to find this video that he published. Here he is. We need to talk about the current state of EVs. That's the one I just showed you, and from July 11th. So you can follow him at Farziness. He says for his bio, he says, "I literally have no idea what I'm doing." You gotta love that. The guy's actually very smart, articulate, and he does his homework, but a little humility goes a long way. And here's where he talks about the unsold electric cars are piling up on the lots. That's pretty important. All right. Let's take a quick look at the detailed estimates page on Zacks.com. So, and if we're talking 900 billion valuation, 900 billion market cap, that's where I talked about the price to sales valuation of under 9 times. Looking at 100 billion this year, 23% growth, 126 billion next year, 25% growth. Here's the EPS slip for this year. Is it priced in? Well, that's what we're going to find out tomorrow, because all the talk is going to be about margins. All right, let's keep going here in my deck, because I got about 5 more slides to show you. So back to Gene Munster. So when he's looking at, so Tesla's surprised with total deliveries, like the consensus was 445,000, and they come in at 466. That's up 83% year over year, and 36% compared to March. So the price slashing was working. How will that show up in the margins is the key. So Munster says, from a competitive standpoint, I believe favoring deliveries over maxing margins is the right approach. Meaning, go ahead and cut costs if you're producing them, especially if you're producing more than you're selling, get them out the door. And he says, but he's talking at this stage of the EV market. So this is where Tesla's leverage is, that they can get away with this. They reached the scale where they can do this. And that's what Farzad talks about. the other legacy automakers can't do it. The smaller ones can't. And now Ford is realizing, they're seeing the writing on the wall. So he says at this stage, that's the right strategy because it puts more earnings pressure on the other car makers. Exactly. And that's what Farzad says too. So, all right, keeping going here. I want to show you my quick 5-point rationale. Once I saw that Tesla or Ford was cutting prices, I immediately swapped. And and here it is. I sold Ford and bought Tesla. Let me just show you my 5-point rationale. What I realized. Number one, Tesla achieving massive economies of scale and vertical integration that other EV manufacturers can't compete with. And this equates to they're creating quality vehicles, but they're also cheaper. They're more accessible to more of the market. When you can bring prices down to 40,000 and even lower. EV adoption is accelerating as both, two things happen. The cost per mile goes down because I saw a stat like, what it takes to, when you get in that car, how quickly, do you regain your investment, especially because of low maintenance, right? And then the relative cost of electricity versus fossil fuels, and then even environmental impact. I see that the analysis is that, let's say after 15,000 miles, there is a net positive for global greenhouse gases. All right, sales of Model Y are much stronger. I pointed that out. Also, I live in the triangle between Chicago, Milwaukee, and Madison. The Model 3s are everywhere. Now, personally, I don't like the Model 3. I think it's ugly, but they're selling like crazy, at least in my area. Here's another thing that Farzad talked about that I think is key, and maybe people aren't thinking about, is next year, the $7,500 tax credit becomes upfront, right? Like, out the door, off the lot, right? You don't get it as a tax refund at the end of the year, potentially a year after you buy it, you get it up front. And, I said, my move here has nothing to do with the Cybertruck, and yet everything to do with it because the brand is dominating. The Tesla brand, regardless of Elon's execution with production and being able to scale and do the price cuts, people like the brand. They like the cars, obviously, and people are happy with their Model 3s, is what I'm hearing. Okay, I want to introduce you to a colleague of mine, an analyst, CFA, Mayur Thacker, and he just published his fresh model yesterday, where he's looking at third line down, gross margin, not including the tax credits, is going to come in at 17%. Let's say the street is at 18, 17 half, and Mayur's a little bit below that. The lower the expectations are, the more that we're set up for Tesla to beat. But if they come in at 17%, it probably won't be pretty for the stock right away. This top line, 466 units sold, 1,000 is, that's old news. Average selling price, 466. So you can stop this video and take a closer look at his model. I want to highlight his comments here. So he says, sequential decline in EBIT, but growth in EPS, which may beat the street. Non-GAAP, I think the street is at, let's say, 85 cents. So we'll see. But what are we looking for? What do we want to hear on the call? What do we want to hear in the report? Mayur says, we now turn towards guidance on Cybertruck production. I don't think that the Cybertruck makes that much difference because everybody knows it's going to take them a while to ramp that. Although I think with, say, the Model 3 and Model Y, they did, once those came out, they were able to ramp production pretty quickly. The Cybertruck might be a different animal. So what's more exciting is the 4680, the batteries. How has Tesla how are they ramping the ability to produce these batteries? So that's going to be huge. And then FSD, full self-driving. And are they doing stuff in India? Oh, that's the other thing. Speaking of India, that Farzad helped me see is the production capacity of Tesla and their goals and what they're actually going to be able to execute on. I mean, the numbers are staggering. So if Austin can reach 2 million in capacity, if China can do 2 million, Berlin can do 1 million, Fremont can do 1 million, Mexico can do 2 million for a possible new Model 2 that might be in the works, what investors are calling it, and then going into India where they could produce 2 million. I mean, the production capacity that they're able to scale is huge. Okay, here's another great graphic from Mayur where he's looking at the leverage. And I mean, it just, and here's where the algebra comes in, right? So even though they could, obviously they could control costs to some degree, but they could produce more cars and sell them cheaper. And this actually helped the bottom line. He sums it up here. As they introduced lower price Model 3 and Y in 2017, gross profit compounded exponentially. This is where Cooker learns his algebra, right? What got them recently, when he says got them, meaning, what happened to the stock, in the past, let's say Q4 and Q1, was that they cut prices quicker than they were able to reduce costs. But over time, the two will be aligned. I think this is a good quote from Mayur. So they'll be able to continue to lower prices without sacrificing additional margins. He says the CFO, Zach Kirkhorn, basically said this during the Q1 earnings call. All right, trying to wrap this up here. Here's a look at free cash flow. This is where the engine is working, right? The machinery of this scale is working, and you see it show up. So let's say that on the left-hand side, this is Mayur's data, but I asked him for it quick so he didn't get to label everything. Over here, this is 10 billion, this 10,000. So maybe that was a peak, but just for reference, annual free cash flow for last year was 8.5 billion, nearly 125% jump from 2021. So you see 21, the end of 21 down here around 4 billion. All right. I wanted to do a flashback as, like how many people have missed this story? Well, this was from Ars Technica by Timothy Lee in 2018, where he's talking about why almost everyone was wrong about Tesla's cash flow situation. So some people were on top of this early. I certainly wasn't, and so I'm not an expert in the EV space or what can drive profits. I thought that that I didn't think Tesla was on the verge of bankruptcy, but I didn't think they were going to really pull this off and make this curve. I work with some people who do, like Brian Bolin. He nailed Tesla. Was a quick buyer during the pandemic flash crash, and did very well there. I think he got a 10-bagger. And then I have a colleague, Tracy Reinick, just did this report, How to Invest in the Coming EV Revolution, where she's talking about lithium prices. And you can get this, just email ultimate@zacks.com and ask for the EV report. All right, just a couple more slides here, I think. So, here are some of the coming issues. This is, what are people looking forward to? Yeah, we want to know about these 4680 battery cells. Has Tesla, are they going to be able to do all this in-house and control obviously their access to lithium? Prices have come down, but Tracy says not for long, as the U.S. starts to produce so many EVs. All right, looking at institutions who own it, I always like to see. Down here at the bottom. So this is after Q1, Baillie Gifford, big fund in Edinburgh, Scotland. they were early bulls, so they were like a Ron Barron, or even before Kathy Wood, they were big buyers. They trimmed to 760,000, but they still have a 26 million share position. It'll be interesting to see if they were selling in Q2. We know that Kathy Wood of ARK Invest was selling, and they just sold some yesterday. And the cool thing about ARK, like love them or hate them, is that their ETF model is to reveal their daily buys and sells every day. So that's kind of cool. But you can, this is from NASDAQ.com. And, always good to look at to see who, I always want to see what is Bailey Gifford doing with their Tesla. Jeffries turns more positive, but again, a bunch of analysts, they moved their price targets basically from 200 to 250, 275, and they're waiting to see what this quarter looks like. What Jeffries is looking for is, can Elon, with the in-house batteries of 4680, can they deliver on the promise to profitably deliver more affordable cars? So that he sees the battery, this analyst sees the batteries as key. Another interesting thing that they're looking at is they want to know, since we already know that production is greater than deliveries for the past 5 quarters, how are they going to manage that? Because that's obviously not sustainable. So, we'll be looking for color on that at the conference call. All right, one last thing here. This is IBD today, this morning. Kit Norton basically summed it up. So this sums up what, look at a year ago, Tesla was doing 29% gross margins, and now they're slipping under 20. Like, what is that trend? That's what analysts are looking at. How much do they have to worry? Are we going to stabilize at 18, 17, or not? Is it going to keep skidding? So, and I guess it's important because Elon had probably been quoted, or somebody in the company, of talking about 20% gross margins being their floor. That's their target. Can they get back to their target even as they own the market by cutting prices? So that will be key. Let me see if I left anything good out here. No, I covered it all. So I'm taping this now on Tuesday at noon Central Time, and I'm going to try and get this out on Wednesday morning, so you have time to review it. But even if you're watching it later, pay attention to the sources, the resources, the people that I'm pointing out here. Find them on Twitter, follow their videos, and then decide, hey, maybe we get a gift, and maybe Tesla disappoints in some way, or confuses analysts in some way, and then the stock is back to, say, 260, 240, and there I think you can definitely take a good sized position. All right, thanks for joining me in the kitchen. And in the link on YouTube here, if you're watching on YouTube, down in the description, I'll have a link to the article version with some more resources and some of the links I mentioned. All right, talk to you soon.